And so I want to come to you to address this very legitimate feeling a lot of you are having, I'm having, about wanting the rich to pay taxes appropriately, right? But I want to do it my way. I want to do it with facts. I want to do it with data. I want to do it having done the research, talk to multiple tax policy experts, which good news, I have. And I also want to do it with some artistic flair. Welcome to the Sunlight Tax Podcast. In this show, we're talking about taxes, money, and careers for self-employed people who have a big vision for changing the world with their work. I'm your host, Hannah Cole, artist, design nerd, tax pro, author of Taxes for Humans, and the founder of Sunlight Tax. If you're a creative, wellness, or mission-driven entrepreneur who wants to grow your business sustainably, manage your taxes, and build a stash of fuck you money so you can control your time and have a bigger impact with your work, you are in the right place. Hello, beautiful. I'm so happy to be here. I've been taking a little break, a little reset. I've actually been talking to a lot of people who are doing the same. I know I am not alone. And if you are in that zone, welcome. Hello. I hope it's been good for you. But I have been working on some side projects, some things I always want to do but never have time for when I'm running my business. And I'm really excited to bring one of them to you today. So let's get into it. You know, I went through tax season this year and people really rightfully have been feeling upset about the rich not paying their fair share of taxes, right? In general, I find I love what I do. I love teaching taxes. I believe in this project we call the United States. I believe in democracy and citizenship, in paying your taxes, which build the community we want to live in. And of course, the other side of that same coin is that you also have to advocate for the representatives that you will allocate that money in the ways that represent you. And so I think, you know, with the Epstein files, with Trump cutting the IRS enforcement budget with a wink, with a lot of billionaires, you know, getting rules made especially for them, it's starting to feel really unfair to those of us regular schmoes who are just trying to pay our taxes. And for me personally, it's become especially challenging teaching this thing that is necessary, that is critical, that runs our country and actually still does good things and actually has the potential to be much better than it is without radical change. And so I want to come to you to address this sentiment, this very legitimate feeling a lot of you are having, I'm having, about wanting the rich to pay taxes appropriately, right? But I want to do it my way. I want to do it with facts. I want to do it with data. I want to do it having done the research, talk to multiple tax policy experts, which good news, I have. And I also want to do it with some artistic flair. And so I have created a project that I hope brings all of those things together. And the icing on the cake here, it's the summertime. This is the time I usually get back into my studio. If you don't know, I am a longtime painter and also I do ceramics as well, but I'm a professional painter for 25 years. And in late 2024, Hurricane Helene destroyed my studio and all 25 years of art equipment, supplies that were inside it. So at the time, you know, I went into hero mode. I could see tremendous need around me, and I raised money. I raised a lot of money and gave it all away to my friends and neighbors, people who were devastated, who didn't have a source of income, who couldn't make their rent. I was financially okay, in part thanks to you, dear listener. Your support of Sunlight Tax, your buying my book, your joining my program, your sharing my work with your friends. That helped me be resilient and able to help people in Asheville during that terrible time. And also your donations. I sent them directly to people who were hit hard by the hurricane. Now, what is also true, I gave away $10,000 of my own money as well, raised $20,000. That was you. If you are listening and you donated, thank you. all of that money went to good use here in Asheville and helped a lot of people, especially creative people, rebuild. But I didn't take a dollar for myself. I assumed Sunlight Tax would always be doing well and that having the money to rebuild my studio would not be an issue at the time that I was ready to do it. I wasn't ready to do it when I was in a state of trauma, worried about my kids being out of school. I had a book deal on the table and I had to write that book. So I just tabled my studio altogether and decided when I was ready, I would come back to it. Well, the world changed a lot. Tariffs, Trump, gas prices skyrocketing, my clients losing a lot of work to AI. And in fact, the income at Sunlight Tax is down pretty badly this year, right? And I'm not alone. I've been talking to a lot of other people who service the creative industries, and creative people are really struggling right now. If you're a copywriter, a graphic designer, you may be really seeing your work dry up, right? Because of AI. A lot of people's health insurance costs skyrocketed in January, in part due to Congress's lack of action renewing the COVID era subsidies for healthcare, ACA additional subsidies. And so a lot of my clients were affected badly and my income is down and I simply don't have the money I thought I would to rebuild my studio. I'm not asking you to cry for me. I'm okay, but I do want to make art again and I do not have a studio or any supplies or places to put the supplies. And I am trying my best to make something work. So I am combining a political campaign with a studio rebuild. And I am hand printing tote bags that say tax the rich. And I have created a website with the facts, the data, the tax policy, and the solutions to fairer tax policy and what you can do right now as a U.S. citizen or U.S. taxpayer who wants to feel better about your country. So you can buy a tote bag, which will support me rebuilding my studio, and send your friends to my website, sunlighttax.com/taxtherich, and learn all about what tax fairness used to look like and could look like very easily. By the way, the midterm elections are just in a couple months. This is a great time to be making some noise about this and carrying a tote bag that will start conversations about true tax fairness. So if you want to buy a tote bag, I am very, very grateful both for you hopping on board of my rabble-rousing, my desire to create a little political change, especially in an election year, and also to help just support an artistic activity and help me get my studio, get the funds together to buy myself a slab roller and a flat file and beautiful paper that, I had a ream of that is all lost to the mud so that I can start again. All right. With that said, the point here is not to cry over me, but I do appreciate any help or visibility you're willing to give my project. Again, you can check out those tax facts and buy a tote bag to spread the word at sunlighttax.com/taxtherich. And let's get into it. What are these facts? What are these facts? This is a lot of information, but I do want to reassure you, I'm not going to dump a bunch of negative information with you without giving you a solution and a next step that you can take away. And also, please know you can get it right this minute at that website, sunlighttax.com/taxtherich. All right, here we go. Okay, so tax the rich is my quick and dirty phrase. It's the bumper sticker version of tax fairness for all. Everyone should feel that their taxes are fair. We might not love them. I'm not asking you to feel that you enjoy writing that check, but they should feel fair to everyone, no matter who you are, right? And at the moment, that's not how it feels to a lot of people, seeing that the wealthiest Americans are not paying as high a rate as you are, right? And so let's just kind of break it down. First of all, a little programming note about tax the rich. That's the bumper sticker version. I did experience some feedback where people said they thought it was too divisive. And I do want to clarify what I mean when I say tax the rich. I do not mean eat the rich. I do not mean punish the rich. In fact, I hope you become rich. I hope I become rich. I am very American in this way. I think go forth, make great work. Do it with ethics and inspiration, and let the money follow and feel good about that, and pay your taxes. And pay your taxes. That's the other part. All right. So this is not about being anti-rich, and it is definitely not about punishment. This, to me, is about fairness, and that's really important. I want to make sure fairness is at the center. Okay. So what are the facts on the ground? Wealth inequality is reaching record levels in the U.S. right now. I want to do what I do best here and just bring you some facts and help you understand what a good next step is for you. What's the problem? Wealth inequality is at record levels. The top 1% control 1/3 of U.S. wealth right now, while the bottom half owns just 3% of the total U.S. wealth. This is a higher differential than it has been in a long time. It's getting close to the levels of wealth inequality that existed when the French Revolution happened, right? This is not good for anyone. 1 in 10 Americans is currently living in poverty, and I mean below the federal poverty line, which, if you know anything deeper on that, is a pretty low bar. So it's realistically a lot more than 1 in 10 Americans who are struggling right now. And if you have been commuting long distances, paying groceries, paying for gas, you know what I'm talking about. This is not a mystery to you. Today, the average American is paying a higher percentage of tax than the top 400 wealthiest people in the U.S. And that, my friends, right there, that's the rub. That's the part that bothers me. So what is the misdirect? Let's talk about. There is a lot of misdirection when it comes to taxes. And this is not an accident. There are a lot of things trotted out to refute our instincts to advocate for tax fairness. And a lot of us, because we don't know the tax policy, we don't know what is possible, we don't even know what is currently happening, it's really hard for us to speak to these. So I want to give you that fuel so you can have these conversations with your friends, with your political representatives, with the people who are running for office, so that you can be a good advocate on this issue that affects all of us. So what's the misdirect? One of the most misleading statistics that is trotted out by people who don't want to pay, by wealthy people who don't want to pay their taxes. And not to paint with too broad a brush, there are wealthy people who do want to pay their taxes, okay? But I'm talking about the ones advocating against it. They say, and this statistic is true, but they'll bring out this stat. The top 1% of Americans pay 40% of the total U.S. tax revenue. Okay, but here's the rub. That statistic is actually about the top 1% of income earners, right? Which is not the same thing as the top 1% of wealth owners, okay? Income and wealth are two different things. Income is the amount of money you earn that comes in a given year, in a given tax year. Wealth is money you keep. Wealth is in your investments, in your real estate, in your company stock. Income is wages that you earn, okay? So, and other sources, not only wages, other stuff too. Could be rent, could be royalties, could be other stuff. Okay. It's really important to understand that income and wealth are taxed differently. This statistic is misleading because it's about the top 1% of income earners, people who earn income. In other words, people who earn income through labor. They do pay 40% of U.S. tax revenue, but this is not the wealthy, okay? This statistic leaves out the wealthy altogether. The wealthiest Americans don't earn much income, okay? In fact, there's a phrase that 1%ers throw around called salaries are for suckers, right? Their money, the money in the top 1% comes from the growth of what they own, right? That is called capital, owning. And when you sell capital, you have a taxable event. But if you don't sell it, there's no taxable event. So when your assets, things that you own, grow in value, that can increase your wealth, but it does not give you any taxable income. So how do the wealthy pay taxes? Well, when you own assets, you don't pay any income tax on them. You don't even pay capital gains taxes on them unless you sell, right? And there are a bunch of loopholes in the tax code that prevent taxability even when these assets are transferred, right? For example, selling a piece of real estate is a moment that we call in tax world, we call it realization, a realization event. That is a taxable moment. And yet, even then, there are a lot of loopholes that prevent realization events from actually being taxable. Okay. Though the moment of transfer is the moment they should be taxed. Some examples of this, and you may have heard these words before, but some examples of what these loopholes are the carried interest loophole, the 1031 exchange, the qualified small business stock exclusion, the absence of any inheritance tax. Did you know we have no inheritance tax in this country? The absence of tax on gifts. We have no tax on gifts. Yes, you have to file an information return if you give someone over $19,000, but you don't owe any tax. There's no tax. Tax-free life insurance proceeds. And one of the worst ones altogether is the step-up in basis rules. These are all loopholes that allow people who have capital to not pay taxes on that capital. How do the average American pay taxes? Well, the average American pays a tax rate of 30%. The wealthy pay an average of 24%, but many pay dramatically lower rates than that. For example, and this comes from the research done in a ProPublica study that I link to on my Tax the Rich website, Jeff Bezos paid I believe the year is 2018, but check the article. He paid 0.98%, less than 1%. I'll tell you what, I pay many, many, many multiples of that because I am a relatively high income earner from a dual income household. We are some of the heaviest, most tax burdened among all Americans, right, as dual income earners. Buffett paid 0.1%. Mike Bloomberg paid 1.3%, and Elon Musk paid 3.27%. Those are criminally low, in my opinion. They're not criminal. They did all of this above board and legally due to special tax laws. But I think most people, that just doesn't pass the smell test. It doesn't feel right that you and I pay between 30 and 50% of our income towards taxes and watch Bezos pay less than 1%, right? This is the tax fairness I think we all know needs to be corrected. Average Americans pay income tax rates up to 37%, but on top of that, we pay payroll taxes. Payroll taxes are a little tricky. They're disguised with names like FICA and FUTA. Payroll taxes are up to 15.3%. Self-employed people, I'm looking at you. Self-employment tax, which is how you and I pay into our Medicare and Social Security, that is 15.3% of your profit that you pay every year. And that is on top of that up to 37% federal income tax. So you could easily pay 50% of what you earn towards taxes. Okay. I'm not saying that shouldn't be true, but I am saying I want Jeff Bezos paying that as well. To give you a little example, someone making $60,000 in earned income, so just working at a job, pays over $13,000 a year in combined federal income tax and payroll tax. While that's only a little over 20% towards taxes, $13,000 out of a $60,000 salary is a lot of money. And in this country, it's hard to live on that. High income earners might pay 50% of their income in taxes, especially if they live in a high tax state. Okay. So when we're talking about the people who really do pay the highest tax rates in the US, think people who earn their money for a living, not people who sit on a pile of capital. So it's probably not the CEO paying the highest tax rates. CEOs tend to pay themselves a very low salary and get their income in the form of company stock that appreciates in value over time. The people paying the highest tax rates in this country are those high income earners. Think doctors, lawyers, sports stars, singers. What are the legal ways that the wealthy avoid tax? Well, here's the strategy. When you're wealthy, you avoid earned income. Salaries are for suckers, is what they say. Warren Buffett has never taken a salary greater than $100,000. Jeff Bezos' salary is $82,000. It's low enough that he has actually claimed the child tax credit before. Sam Altman's salary is $76,000 a year, and Elon Musk takes a salary of $1 a year, okay? If you want to be wealthy, you are not trying to earn income. Earned income is the one that gets taxed. Rely on the growth of their assets. That is the way that the wealthy become wealthy and stay wealthy. They own largely company stock, these tech billionaires in particular, and then they borrow money against their wealth. So they can get, if you are a billionaire or 100 millionaire, you can borrow money from a bank to avoid having to sell your stocks, which would actually create a taxable event. You borrow money from a bank using your enormous pile of wealth as collateral, and the bank will give you very favorable interest rates because what are the chances you default? Not very good. You are one of the lowest risk customers they could have. You are basically easy money to that bank, right? And do you ever even have to pay back that loan? Yes, you have to pay back the interest, of course. That is how the bank makes its money. But does that loan actually ever come due? Well, technically maybe, but rolling it over into the next loan is basically really, really easy because you are a very desirable client to the bank. The bank's job is to be loaning money, to be earning interest on money loaned. And you are about the easiest customer they could possibly have. So you are highly desirable. And if they won't extend your loan, you can roll that loan over into the next institution. Using this strategy, many billionaires and multimillionaires pay close to nothing in taxes. That is how you can have a tax rate as low as Jeff Bezos. So where is our U.S. system currently breaking down? Well, one, in our failure to tax appreciation of assets, right? In our failure to tax inheritance. If you find $100 on the street, and I say this, I am quoting Ray Madoff, who is the author of a fantastic book called The Second Estate. Highly recommend it. I will link it in the show notes. But this example comes from her. If you find $100 on the street, you have to record it and pay taxes on it. If you inherit $1 billion, you don't pay a penny. Does that feel right to you? Well, that is legal. That is where our system is currently breaking down. Tax should happen when property is transferred. When you no longer own something, that should be the moment you pay the tax. Now, this may be a transfer from the person whose pile of money they're giving to their kid, or, the inheritance that kid gets when their parents die. Canada, for the record, has a rule like this. So this is not some impossible thing to do. Our neighbor to the north is already doing it, right? Our lack of an inheritance tax means we are becoming a country ruled by rich kids, right? Just look around the media environment and see how many sons of billionaires are currently the owners of media companies, and you will see what I'm talking about. The estate tax is supposed to be the time where taxes get paid on money before it's distributed, but the estate tax in our country has been gutted and filled with loopholes. In the early 1990s, there was a campaign by the 18 wealthiest families in the U.S. to turn the public against the estate tax. It worked. Ordinary Americans feared that the estate tax would hurt family farmers, even though these lobbyists could not locate a single American farm that would actually be subject to the estate tax. They trotted out a guy who was a farmer who was certainly worried about the estate tax, but nobody even told him that there were exceptions that would mean he didn't ever pay $1 of tax. So there was never, even though this is the boogeyman, there's never been a single farm that's gone out of business because of the estate tax. Not a single one in U.S. history. 1990, though, was the year. Because of this campaign, Congress got scared of the public because the public now turned against the estate tax, which used to be the way we handled taxing inheritance, taxing wealth before it was distributed, and creating an army of rich kids who could run all our media companies and tech companies. So 1990 was actually the last time Congress has ever closed a loophole in the estate tax. They used to regularly update the rates and close the loopholes. 1990 was the last time they did, 36 years ago. I do not think a wealth tax is a good idea. And this is something I want you to listen up and pay attention to, because in this midterm election cycle, there's a lot of knee-jerk reaction that wealth tax is the way to go. And I understand why that feels like the right answer, but I want to warn you that a wealth tax is a waste of political capital, and there are more effective ways we could go that I think are better. So I don't believe in a wealth tax because of this. It's a waste of political capital. The Supreme Court has indicated it will very likely strike down a wealth tax if one is passed. It's not clear that taxing wealth is legal in the U.S., right? Experts on both sides of the aisle agree taxing income is legal, but taxing wealth might not be. So this simply might not be something that will hold up in court, and that would be a lot of political capital you'd be spending advocating for something that ultimately gets overturned anyway, right? I don't know about you. I don't love the idea of organizing for 5 years only to have all my work trashed. Also, taxing wealth is really difficult. It creates a mess. Taxing wealth, unlike taxing income, is really hard. It means you have to assess the value of that wealth each year, and this is very difficult to do. This will require hiring accountants, doing valuation, and the easy stuff to value is your stock portfolio. The hard stuff to value is your stakes in various companies that might have 50 levels of partnership, ownership layers, right? Valuing your wealth in various organizations, companies like that could be very difficult. One, create a really unreasonable administrative burden for the wealthy. I do care about that. I don't think that's a kind or fair thing to do to the wealthy, even though they do have the dollars to pay accountants. But more importantly, it might actually discourage the wealthy from putting their money into the stock market, which actually does benefit U.S. companies and your 401k, whereas when they take it out of that and put it into these twisted, complex private companies, you and I don't benefit. Your 401k does not see any benefit. So there could be some terrible repercussions of this. What would work better? Ray Madoff, and I will quote her because her book, The Second Estate, is really a worthy read and really readable and great. What Ray Madoff advocates, and I fully agree, is taxing assets at the moment of transfer. Across the board, 0, period, end of sentence, no exceptions. One giveaway to the wealthy that I want to highlight here, because this is one of those misdirects that we are given as U.S. taxpayers. One of the largest giveaways to the wealthy that happens currently in the U.S. is defunding the IRS. IRS enforcement funding cuts allow wealthy tax cheats to skip out on paying the taxes that they acknowledge they owe. They know they owe, and they simply don't pay the bill. This is called the tax gap, and in 2025, it was about $700 billion. That is money owed to the U.S. purse that is simply not paid because the IRS is too weak to collect it. Every dollar spent on IRS collections returns $12 to the American taxpayer. Joe Biden tried to stop this waste by allocating $80 billion to the IRS enforcement efforts in the 2022 Inflation Reduction Act, specifically targeted at taxpayers, at enforcement for taxpayers earning over $400,000 per year in annual income. Republicans in Congress later cut that funding. If you're going to put in the work of organizing and advocating for fairer tax laws, that work is moot without funding the organization who enforces those laws. That's the IRS. Wealthy tax cheats like a weak IRS, and they've convinced us to hate the IRS. Don't take the bait. The IRS is a body of civil servants with a very important job. Passing fairer tax laws is a waste of time if we never bother to collect the money in the end. So the solution here is to adequately fund the IRS. All right. That's a lot. That's a huge info dump. I want to leave you with some solutions. So here are the solutions that I propose. Most of these come from other people. Ray Madoff and her wonderful book, The Second Estate. Also, Catherine Ann Edwards of The Optimist Economy, which is a fantastic podcast. If you haven't listened, I will link it in the show notes. And also William G. Gale, who I interviewed in my tax policy chapter in Taxes for Humans, my book. Okay, solutions. Tax assets at the time of transfer and the exceptions, like the step-up in basis, the 1031 exchange, and qualified small business stock exclusion. Bring inheritances into the income tax system. Tax them as income. This bypasses the problem of valuing wealth. It makes sure that that money does get taxed eventually, which currently it often does not. But it doesn't do it in a way that the Supreme Court is poised to strike down. It does it in a way that brings it into the same taxpaying system that you and I are currently subject to. Equalize the rates between capital gains taxes and ordinary income taxes. And lastly, fund the IRS. All right. Those are the solutions. I want you to marinate on those, maybe read through my website, send it to a friend, think that through. Ask me any questions you want. I'm at Sunlight Tax on Instagram. You can always send an email to hello@sunlighttax.com. I'd love to hear from you. I do this in the spirit of civics and making this country that I love, I truly love, and am grateful for the opportunities it has given me. I do this because I care that this country feels fair to all of us. And I have been serving clients all year and for 10 years. And I can see now more than ever that people really feel that our tax system is not fair in the way they once felt it might be. So this is something that's getting really heavy and it needs to change. Let's talk about what you can do, right? Spread the word about this campaign. Share my website, sunlighttax.com/taxtherich. Share what you know. Start a conversation. Call your senators, call your members of Congress. I have links to those on my Tax the Rich website. And I have some organizations that you can support. Certainly read what they do, maybe get a paid subscription. ProPublica has done really important reporting on how the wealthy pay taxes. They have brought the lie to some of those misdirects that we are served up because tax returns are private information. The Brookings Institution Tax Policy Center is also a very great nonpartisan think tank that does research and data analysis about taxes and tax policy. There are advocates, people advocating for fair tax policy. 3 organizations that I think are doing good work: Americans for Tax Fairness, the Center for Tax Justice, and Patriotic Millionaires. All right. And I would just like to thank Catherine Ann Edwards, the economist, William G. Gale, the economist, and also Ray Madoff, who wrote the wonderful book, The Second Estate, which I hope you will get a copy of. It's really fantastic. And lastly, if you go to that website, you will see a picture of my destroyed studio, but mostly you will see me making prints in my office of these tote bags that say Tax the Rich in my own handwriting. These are handmade. I want this campaign to feel like it was started by an artist, right? I wanted to bring that handmade touch and do something creative. And if you buy a tote bag, my hope is that you will bring it shopping, that it will start a conversation with the cashier at your checkout, and you can direct them to my website so that they can learn about fair tax policy. My goal here is that all of us get that tax education that makes these conversations fairer and on a more level playing field. All right. And while you buy a tote bag, you are supporting me rebuilding my destroyed studio, and I'm super grateful. If you want to buy 5, you can buy 5 and give them to friends as gifts or just because. All right, so you can go see all of these facts and get a tote bag that says Tax the Rich on my website, sunlighttax.com/taxtherich. I'm so grateful for your support. I'm so grateful for your attention to an issue I think feels important to all of us. And I hope this episode has felt helpful and enlightening to you. I'll see you next time. Bye. Thank you for listening. If you like the show, be sure to subscribe, leave a review, and share it with a friend. It really helps. I'm so grateful. My tax guide, Taxes for Humans, is available wherever you buy books and at sunlighttax.com/book. This podcast is for education and entertainment only. Nothing in this episode should be taken as individual tax or financial advice. You can find all the tools, books, and links I reference at sunlighttax.com/podcast.